What it do? It is your boy Young Soros back with another video. I missed you guys, man. I know you haven't heard from me in a long time, but it is time to get back to it. Starting with the volatility in October does not disappoint. As you can see, the SPY, it was extremely choppy today, along with Jerome Powell, the bonds getting blown up. You have the dollar exploding, and now you have the dollar bond phenomenon where they're just feeding off of each other, and the dollar is about to hit these highs, and once it hits these highs, then it is off to the races. Either the market's going to catch up with the dollar and the bonds, or the bonds are going to catch up with the market as well as the dollar. So we got to see. It is going to be a good week. Welcome to Volatility October, one of the most volatile months of the year. But I have something for you guys. It is one of the best months of the year for the stock market, as well as November and December. So do not get fooled with these whipsaw moves and these extremely volatile moves you see in the market, because it can easily go up and it can easily go down, and it all depends on what Powell says, inflation, all the data. So let's jump right into it. Let's jump right into it, baby. Starting off with the economic calendar. There is a lot going to be going on this week. You got ISM data coming out. You have Australia interest rates. They're going to be coming out soon. You have the JOLTS job opening. They're going to be coming out. ISM PMIs. They're going to be coming out. You also have the unemployment rate coming out Friday as well, so that can get really spooky for investors if the unemployment rate decides to suddenly rise, and Canada's unemployment rate comes out as well. So there is a lot riding on the table. You also got some Fed speakers, but Jerome Powell spoke today and not much was really said, but it is all about the data coming in to October and for the next 2 weeks. I do expect the market to be extremely volatile and choppy. It may even go down a little bit, but as we end the year and as we get closer to the end of October, that is where I will start to expect the market to pick up and rally. And I have some evidence as to why I think that is. If you take a look at this chart here, you're going to notice something very interesting. Only the big names were green today. Everything else was just a sea of red. Of course, you had a couple of pockets of green here and there, but for the most part, it was Apple, Google, Microsoft, Meta, Nvidia. They were carrying the stock market like usual. Now, what this means is that there is a possibility that there is another rally brewing underneath the surface. This is what happened last time. If you remember, before the inflation report came out last year of October, you had tech stocks running, and then you had the inflation report come out. You sold it off only to bounce right back up. It was extremely volatile, and then you took off from there. Now, what's interesting about this is that the market is extremely weak, but if you have these companies continuously carrying the stock market, it is only a matter of time before they will catch a bid and the rest of the market will be green. But for the most part, it was a sea of red. Everything was getting clapped besides the bigger names. If you weren't a bigger name, you were getting clapped. So the Nasdaq was green for the majority of the day, and I think it closed green today too. So that is pretty interesting in that regard. There is just a lot going on within the markets. It is extremely volatile. Like I said, you had the dollar breaking out almost 1% gains, as you can see right here. You had the bonds absolutely getting murdered. You had the 10-year, 20-year, even the 1 and 2 year all getting blown up, and you have these companies, going higher and all these things going against it. So there might be a rally in the books, and the sentiment is turning a little bit bearish than normal. So with that being said, you want to watch out for these next 2 weeks. If we go lower and the sentiment starts getting a little bit more and more bearish, you may want to start positioning to grab some calls depending on what the data comes out with. The market is not going to make up its mind until the data comes out. And what data am I talking about? I'm talking about CPI. If the CPI comes out hot, that's going to justify the Fed and these higher for longer rates. That is going to kill the bonds, and that is going to kill the stock market. And that is where you will see one of the rare exceptions where the stock market will actually finish red on the year going into November and December. So you got to keep that in mind. And also too, what's getting a little bit scary is that you had energy selling off too. So if you didn't have these names propping up the stock market, it would have been a very, very ugly day. And I can give you one example why. You had the VIX of the UVXY all popping higher. But hey, you had Meta, Google, Nvidia, Microsoft finishing over 2% on the day, carrying the stock market. The Nasdaq almost finished 1% on the day, while the Dow Jones was red. If that doesn't tell you anything, then I don't know what does. Okay, so you got to keep that in mind. I am going to be going long here really soon on the SPY, NASDAQ, and the Dow, but I want to wait until the data confirms my theory. But I think seasonality is going to take over regardless of if the data comes out good or bad, as long as it doesn't come out too bad. I am referencing what happened to last year. If you don't remember, you had an inflation print that was hideous, and the market rallied off of that, and that's what started where we are now. It bottomed out, and then you just continued from there. That is the power of October volatility. So you gotta be prepared and you gotta stay on your feet. I am looking to get in on the SPY and the Nasdaq and buy some calls and things like that, but I want to wait and be patient. Now, what's interesting about the CPI, however, it's not looking too good. It is not looking too good for the CPI. As if we go here, you could take a look at the CPI. Look where we're back. It's looking like it's trending up. Now, could this go back down and hit 4%? Maybe. But as of right now, it is looking like it is taking a run back to 5%. Now, here's the thing though. I don't believe that it's going to get any cooler, as we just saw energy absolutely go crazy over the summer and leading into August and September. And another thing is that they have another chance to run going into these colder months with oil and energy. That is going to drive up prices even more because more people are going to be using oil and energy, obviously. So there might be a lagging effect right now with oil and energy, so you got to keep that in mind. But this inflation report right here, I feel like it's going to go back to 5%. If it goes above 5% and approaches 6% territory in the next reading, we are going to have issues. The market, the bonds, everybody's going to freak out, and Jerome Powell may lay down the hammer once again. He may come out and be like, all right guys, we're raising again. And he is going to destroy everything. He's going to destroy everything because the Fed wants their credibility back. And if he sees that inflation is not going down, he is going to do anything in his power to get rid of inflation. That is his job. Now, taking a look at the dollar, it is approaching 30, and if once it hits 30, you will start to see the stock market break. It can only take so long before the stock market can ignore the dollar breaking out, and the dollar effect is really being hidden by the other currency moves. You got the UK currency, Japan, all these other currencies. They're really hiding the dollar move. It is at the same levels as it was last year, but if you remember last year when the dollar was breaking out, the SPY was lower, way lower, and it was breaking. You are holding very steadily with not only the dollar freaking out, but also the bonds absolutely getting clobbered. And last year that would have not been a good sign at all. You would have seen the market absolutely sell off. So the fact that we're not seeing it sell off so quickly is very interesting. and we will keep an eye on that. But let us get into what I traded today and the positions I am holding. Starting with, I traded the SPY weeklies. I got clapped on those. There was a lot of volatility going into it, and that's why I say, guys, you got to be careful because they can even clap me. I got in a little bit, and then I got clapped on these, so I lost 50 bucks. I wanted to get in on the TLTs. I've been holding these for a really, really long time. They're almost gone. I wanted to play the bonds. I got clapped. So those are the bond plays. I'm thinking about shorting the bonds again, but I had an idea with the bonds that Jerome Powell may, cut rates or he may do this, but after what he did in August in Jackson Hole, it is out the window. Next thing on the list, we have Ford. Now with Ford, if I'm expecting a stock market rally, Ford is usually a go-to stock. They will move big in a hurry. Now, a good thing with Ford is that the contracts on the option chain are extremely cheap. So I ended up grabbing the March 15, $14 calls. I bought 5 of them. I may grab more if Ford starts to slip going into this volatility. I may grab more. I got a little bit of time because you want time in this market. You want time when you're buying options, period, but you want more time. So if it moves faster than you expected, you can get more of that premium. Same thing goes with the dollar. Now, I bought these in the morning, and I'm only up 15 bucks on it. I'm expecting the dollar, once it hits 30, that's where I'm expecting these calls to start really growing in size. I got the $30 calls the January 19th, and what's interesting about these is that the premiums haven't moved yet. So maybe the dollar, maybe they're messing with the premiums a little bit on the dollar. It has not moved a lot, but once the dollar hits 30, and depending on how fast it hits 30, I will either hold these and ride them out, or I may sell them depending on how fast the dollar moves and the bonds and things like that. It is going to get very wicked, so keep an eye on the dollar. Next thing we have I bought the $42 puts, and they were actually pretty cheap. They were pretty cheap, especially with the time I got on these. And as you can see, it is working very well. Again, anything related to bonds, yields, all that sort of stuff, it is absolutely getting clobbered. And as you can tell, it is not playing nice at all. The bond, nothing. It is a bloodbath. It is really a bloodbath. And let's take a look at the chart here. It has been selling off pretty heavily over the last, couple over the last month or two. So I expect more selling pressure to come in, as if Jerome Powell says what he says and means what he says, and he comes on and he says these things. I expect and the real estate sector to really struggle if the bonds continue to sell off, because that is not good for yields. That is not good for, mortgages, all that type of stuff, right? So I expect it to get really ugly in the real estate sector, and personally, I'm glad I went with the O's. I could have shorted the sector itself, but I want to see what more opportunities I can get with the option chain. Moving on to XOB, which is the materials. What's interesting about this play, I'm up $260, $270, but what's interesting about this is that I have a lot of time, so I'm not going to cut the one contract I have just yet. I'm going to leave it on the table and hold them a little bit since it moved faster than I expected. Now, if the stock market decides to rally, that is not good for materials, because usually what we've seen in the last year or two is that materials tend to sell off before a market rally or during a market rally, and they tend to rally whenever the stock market gets weak and things like that. So I made this trade assuming that if the market rallies, then materials would get clapped even harder, and no one's going to be buying these, because why would you buy these when you can just throw all your money into Nvidia and get like 1,000% gain? You know what I'm saying? So I bought these under the impression that, okay, stock market rallies, materials get clapped. Now, I'm not going to hold these all the way till January. I'm going to try to sell out in November or December, depending on how fast they can move. So we will keep an eye on those, but I'm definitely going to hold these forwards because I think that Ford is at a good place right now. If it hits 1250 and then the market rallies, it could easily go up to 13 and 13.5 and break 14 is one of those stocks where it can rally big. So you got to keep an eye on those. I am still bearish on Ford. I am just playing the short term contracts as of right now, and I got a decent amount of contracts. Five of them for about $200. So not too shabby, not too shabby. I paid $400 for the dollar calls, so we will see what happens with those. But that is it, ladies and gentlemen. I hope you guys enjoyed the video. I am going to be uploading more often. There was a lot going on, but I am back now. I will keep you guys updated in the markets and things like that. It has been your boy